Should we trade on a 3 features forecast of the set index? Hello, I am Shutai Huang, and I am here to answer one question for Kun Apinya and the committees. Should Chao Phraya Asset Management trade on a 3 features forecast of the set index? So here's the setup. We manage a 2 billion baht Thai equity book. Kun Apinya brief was to choose one asset our client care about, choose 3 features that might affect it, no more than 3, build the simplest forecast possible, and then report honestly if it works. I choose the set index, not a single stock, because these decisions affect the whole book. It is about whether to reduce risk across our whole portfolio, not about one company news. And I also chose to forecast the next day's percentage return, not the price level. This matters a lot because if we forecast the price level, we might always get very high R squares. And this might happen because today's price is already very close to the tomorrow's price. So forecasting the returns avoid these problems. Now, for the data, I collect the set index and the USD Thai baht exchange rate directly through Y Finance. This is an API, and this covers 13 years, more than 3,200 trading days, with no missing data after I match both series to the set trading calendars. Now, I use exactly 3 features as required. First, today's return, which may show short-term momentum or a small reversal pattern. Second, the ratio between the price and its 5 days moving average, a common technical signal. And third, yesterday's change in USD THB, because foreign money flow in and out of Thai stock is often linked to the Thai baht. And before trusting any of these results, I had to make sure that there was no look ahead bias. This means no feature secretly used information that would not be available at the time of the forecast. And I also explained this clearly for each feature in my notebook as well. I also split the data by time. The first 80% of days of training, the last 20% of testing. My code also check and stop immediately if these two periods overlap. So, does this model work? No, it does not. On every metrics, the model does not do better than a simple baseline than just predict 0 returns every day. The error size shown by RMSE and MAE is almost the same as the baseline. Actually, it might be a little bit off. Now for directions, whether the model correctly predicts if tomorrow goes up or down, it scores 49.54%. This is below a simple coin flip. I want to be very clear about this result. It is not a close result. A one-day forecast for a large liquid index like SET is very close to a random. And any pattern in yesterday returns, the 5 days trends, or the currency move is usually already reflect the price before the next trading days begins. And looking at which features matters most, today's return has the biggest effect. Then the moving average ratio and the currency features had the smallest effect. But I must be careful around here as well. These results only show a relationship in this one sample data. They do not prove any of these features cause the index to move, and because the whole model is close to the baseline, none of these effects are strong enough to trade. So here's my recommendations to the committees and Kun Apinya. Do not trade using this model. And the 3 features do not show any real usable age. And if we put monies into a signals like this, the risk is serious. Even a small 1% edge that is really just a noise could cost us 20 millions baht for nothing. And this is a real cost, not just a theory. Now, this does not mean that we should stop looking for any further forecast. However, a long time for horizon such as weekly or monthly returns or smoother target like realized volatility may show clearer patterns in the futures. But for these specific questions, the honest answer is that there is no edge here, and I would rather bring the committee this honest result than a backtest that any only look good on the paper. So thank you for listening.